All right, guys, welcome back to the channel. And in today's video, I want to cover three topics. The first is to showcase the investing profile that Composer did on me. The second is to showcase a new feature that they added, which is threshold rebalancing instead of frequency rebalancing, meaning instead of every day, every week, every month, every quarter, every year, you can rebalance based on the percentage deviation from your chosen parameters, which is a wonderful addition. So, and then the third thing is I just wanted to show a quick little option trade that I did the other day that netted me $800. And then I used that $800 to buy Goldman Sachs, and I'll explain why. So let's just get started. Kyle Birmingham, a employee at Composer. I think he used to work at Vanguard. You guys know, very much influenced by Jack Bogle. And he's now working with Composer. And he just did a little profile just on me. It just talks about here, my vineyard in North Carolina, my real estate holdings, my novella. We had a nice Zoom call. We went over a lot of different ideas. Very much enjoyed it. And what's cool is they were able to tell that I've done over 1,300 back tests on my account, which is really interesting. I didn't notice that I had done that many back tests. So they talk about that. And then he mentions the idea of syncretic, which for those of you guys who follow this channel, you guys know that I consider myself a syncretic investor, which really is a fusion. He actually looked it up here. Characterized or brought about by a combination of different forms of belief or practice. And so, not just being a value guy like Warren and Charlie at Berkshire, Benjamin Graham, David Dodd, not being a Kathy Wood growth, not being a pure quant, kind of taking from these sort of one might even say, competing philosophies in investing and pulling a little bit from each to create my own style of investing, which has done well thus far. So just different analysis there. And then I actually used two symphonies in the interview that we talked about. The first is permanent store of wealth, which is for ETF, very simple. It's kind of a replacement for the traditional 60-40 portfolio, or Ray Dalio's all weather, or Warren Buffett's 90-10, his legacy portfolio. And it's very simple. And it's kind of like he talks about here. I just talk about how, it's built in a way for someone, let's say they were building out their legacy, or let's say they inherited money or won the lottery, and they weren't really interested in investing personally. Like, they weren't interested in watching CNBC and Bloomberg all day and logging into their account and understand, but they still wanted to do well, and they wanted to be an investor in some capacity. So this one is 70% VOO, 10% bonds at BND, 10% real estate VNQ, and 10% commodities DBC. DBC obviously has done very well recently, and you can see why that's included. I feel like a lot of investors miss out on REITs, on the real estate and commodities. They just kind of want the stock and bond breakdown. But I feel that those add nice diversification and benefits to a portfolio. Again, you can see with DBC, especially recently, and when you have geopolitical crises, generally commodities, oil, precious metals, real estate, and such rise. So that is the permanent store of wealth, and that's done quite well. And then I created like maybe 10 different iterations. I did one that is the leverage version. So that would be like here, it would be UPRO, TMF, DRN, and then the commodities. I might have just done like leverage gold, maybe UGL on that. And then even within the grouping, so then I did one where, like, instead of just VOO, I did maybe like VOO, QQQ, DIA, was it VXUS, which is, absent US bonds. I chose like, 3 or 4 bond funds, real estate, 3 or 4 real estate funds. And I did more than DBC, GLD, SLV, and so you can add different permutations on this particular symphony. And then the other one I did is one that, I kind of got the idea from Dane Van Domelen from Seeking Alpha a while back of harvesting gains in leverage ETFs into more stable traditional bond funds. So it's a very simple UPRO BND, rebalanced every day. And I've been running that one since June, and that's done pretty well. And it just goes on that. And then he talks about here, build through iteration. That's just sort of what I explained. Like even within that permanent store wealth, you can kind of edit that and say, well, VOO isn't enough for me. I want DIA and QQQ. And I want to add a little bit of leverage to each of the groupings. So a little bit of bond leverage, a little bit of equity leverage, a little bit of real estate leverage, maybe a few percentage of each to kind of tweak it. And there's sort of endless iterations, permutations that you can run. And, so he just goes on the commodities there. So yeah, it was very appreciative. Kyle and Donovan conducted that interview with me. I very much enjoyed it. So there it is. So let's now go to Composer here. And this is the balanced alpha that I run. Again, I have different iterations, permutations of balanced alpha. And this is a new feature that they just released. I just got the email yesterday from Benjamin Rowell, the CEO of the company. And instead of adding just the rebalancing of daily, weekly, monthly, quarterly, yearly, they added the threshold, sort of a band style of rebalancing, which is great, so that you're not just arbitrarily rebalancing, okay, it's the quarter, it's time to rebalance. But what if there hasn't been much change on a percentage basis? What if they're exactly, let's say it's unlikely to happen, but let's say they're exactly the percentages that you started with, or very, very close. Say they're under 1% or 2% difference. Why rebalance? Because you're just going to incur maybe taxes, and it's sort of maybe a futile exercise. Whereas this way, you can see the trade setting at 5%. And what's interesting on this particular thing here, I compared it against my balance alpha, which is quarterly setting. So this is the yellow here is balanced alpha quarterly. This is the new threshold. You see annualized return. So let's go back. This is last year. Let's go back like 3 years. Okay, so let's do that. So you can see the annualized return. So on this particular case, the traditional quarterly rebalance of my balanced alpha over the last 3 years has returned 41.1% versus SPY 17.2%. And then the threshold, the new feature, is 34%. So you can't just look at that though. I mean, obviously the quarterly, because there's taxable issues, if you're in a taxable account of rebalancing more than not. So again, just Composer taking it to another level, giving you another option on the rebalance. So there it is. And so let's now come over here. We're going to go into TD Ameritrade. And this is a little option trade that I did the other day, 3-8. I run what people call the wheel strategy. I call it personally ping pong. A lot of times I sell puts on assets and collect a premium. But the thing is, what distinguishes what I do, I feel, is I don't use that premium for income. I don't take it and, go on a vacation. I take it and I buy what I generally value-oriented assets and income-oriented assets with the premiums. This is a perfect example of my philosophy with options and then the premium garnered. So I had sold a while back, maybe a few months back, I sold the JNUG, which is a leveraged gold fund, okay, at the 100 strike on a put. So maybe it was trading at 110. I sold the 100. I was put the shares. JNUG subsequently sold off. So I was just sitting on my hands with the asset. It was in the 70s, 60s. It had sold off. Well, the other day, with all of the geopolitical issues going on, it had bounced to 82 or 83. So it wasn't too far off the 100 price where I purchased it at. So I looked at the premium and I did it out till April 22nd. So the last week in April where I was able to sell the option. And lo and behold, the premium was $7.90. So I sold that, collected $789. And now I always have a list because I'm always running my value screens of things that I see that are undervalued or value oriented. So right now I'm looking, I had things like Tyson, um, Goldman Sachs, a lot of the home builders are showing up on value screens. Still some of the Canadian banks, believe it or not. And So then what I do is I look at those assets in fast graphs just to double check that they generally are undervalued. But anyways, look at the time here. I collected this premium on 3/8 at 10 o'clock and 23 seconds. At 10:01 and 2 seconds, I bought Goldman Sachs. So you can see like money in, money allocated. The money came in and immediately it went to accelerating compounding. So I bought 2 shares of Goldman. And with TD, you can't buy fractional shares, so I had to just kind of like buy those two, and so I had capital left over. So for example, let's take it. So I had 789, 34 minus 644, 72. So I had $144.62 left over, and I didn't just want to leave that in cash for the cash drag. So a lot of times, what I do with the leftover capital on an option premium. So let's say in a situation like this, I have $100 left over, but I don't have enough to buy Goldman or Tyson or something like that. I generally look to buy income. So a lot of times I'll buy a PIMCO fund, which I've learned a lot from Reed Ramore on Seeking Alpha. Or I'll buy a QYLD, which is a covered call ETF, and that's like a 10, 11% yield right now. And so I'll just take that and I'll buy income with it. And then it just, again, kind of accelerates the principle of compounding. So, but let's go to fast graphs and you can see here, again, I see these in value screens and then I pull them up on fast graphs. Again, for those of you who don't use fast graphs, I'll just go over a couple things. So let's just look at Goldman dividend yield 2.40, blended PE got 5.98. Its earnings per share yield is 16.73. Chuck Carnival, the CEO of Fast Graphs, likes to see at least above 6.5. So that certainly fits the bill. And just a quick, like a little sneeze, excuse me on that. A quick little way to look at fast graphs. So the black line is where the stock is trading. You can see 333. I think I bought it in the 320s. What's PE is. The blue line is the normal PE with which it trades at. So it generally trades over the long term when they analyze at a 12.57 PE. And then they also have the orange line, which is kind of like the fair market value, which oftentimes is defaults to 15. So anytime this black line is trading under the blue line and the orange line, it's generally considered undervalued. You can see going back, it generally was trading at its kind of its fair market value. Looking back in time, you can see right here in 2018, it started to trade under, and it's kind of come up a bit here. Right in 2021, it's really started to trade close to its fair market value there. And then now, there's definitely the big gap, which you would use the Benjamin Graham term margin of safety. So that's something that interests me. And we'll just pull up another one here. I mentioned Tyson is another one right now that's showing up on some value screens. And again, this is my process. So that's what I'm revealing to you guys is how I run the screens and then I take them and look at them further. So again, now you can see here the blue line, the orange line in fast graphs are like almost one and the same, which means its normal P that it trades at is 15.1, and then the default fair market value P is 15, so numbers one and the same. And you can see that Tyson is well beneath both lines there. And it started really getting cheap not until basically 2020, I guess. And the COVID sell-off, it really got super cheap. It's recovered a little bit, but you still, there's still a gap here. And again, with the market trading pretty elevated, Goldman Sachs, it was 6 times earnings. This is basically 11 times earnings. Pays a little bit of a dividend. Earnings per share yield is over 6.5. So again, I would like to take option premium and buy these things that are value oriented. So anyways, that's pretty much it for today. The next video I'm going to talk about some of the Russian assets that I held and the status of those, what they're worth, what the future for those assets are. And again, I want to do that because I like to really, I think one of the benefits of the way I structure this is transparency. I don't only show my wins, I show situations when I've lost and why I've lost, and I share that as well. So that'll be kind of the next video coming down. And again, this is my new channel. I had to move everything over here. So appreciate you guys liking, subscribing, and all those things. So take care. See you soon. Ciao.